We're joined now by Daniel Lacalle, Global Chief Economist at Tressis. And Daniel, I want to talk to you about a number of economic issues across Europe. But first, I wanted to get through some of the assets that we should be watching in 2021. I noted earlier with Mark Cudmore that gold, jumped this summer to almost 2,100 and then dropped to less than 1,900. Meanwhile, Bitcoin has just shot up like, Al Gore's climate change hockey stick. What's going on with these two assets, which should be more connected?
Good morning. I think that what is happening with gold in particular is that a lot of investors have taken money off the table because of the belief in a very rapid recovery, in a very abrupt recovery of the economy that would basically lead, as it did, value stocks and the most cyclical assets back up. However, I think that it's interesting to see how gold has retained its core support levels. And I think it's also very important to understand that into a 2021 in which investor expectations are extremely optimistic, it is very, very good to have an asset that has some level of hedge against the monetary stimulus and against the changes in the economic cycle. In the case of Bitcoin, it's very similar. But Bitcoin, like most cryptocurrencies, is very pro-cyclical. We need to understand that, and it's also very volatile. And I think that it's rising dramatically precisely as a response not to what has been happening with global stocks, but what has been happening with the world currencies. If we look at, for example, a year in which many people have talked about the weak dollar, the dollar has actually strengthened relative to more than 60 currencies globally. So what we're seeing is a debasement of many fiat currencies, and many investors are taking the opportunity to look for some kind of protection against the loss of purchasing power, and that tends to lead to more investing in cryptocurrencies.
Well, I wonder what you think, Daniel, about there are concerns, of course, about central banks around the world ramping up printing presses, hurting the fiat currency, bringing about inflation. But inflation is nowhere on the horizon, certainly for the ECB. Nonetheless, we see euro strength and so many analysts forecasting dollar weakness going forward. How do you feel about those two currencies and that trajectory?
Well, I think that if we look at the long-term trend of the euro relative to the US dollar, it is unchanged. It remains in a bearish long-term trend, fundamentally because the euro is not the world reserve currency. The monetary policy of the European Central Bank is significantly more aggressive than that of the Federal Reserve. If we look, for example, at the balance sheet of the European Central Bank, it is now more than 61% of the GDP of the Eurozone. So what we're seeing right now is the typical year-end rally based on a very optimistic view of the Eurozone recovery. I think that will probably unwind into 2021. In the case of the dollar, I think that obviously what we're seeing is a very rapid increase in the balance sheet of all central banks, not just the Federal Reserve. Actually, if you look in comparison, the Federal Reserve's balance sheet at 34% of GDP is tamed compared to the Bank of Japan's or the European Central Bank. However, what I think that is interesting is to note yet again, well, I've been saying it for a few years, you know it very well, that quantitative easing is deflationary. Quantitative easing perpetuates overcapacity, is funding massive increases in debt and deficits that go to current spending from most governments, and therefore velocity of money does not increase, and it does not generate the inflation that central banks want. However, it's very inflationary in risky assets, as we have seen in sovereign bonds. We are seeing today that despite rising deficits and massive imbalances, sovereign bonds of Eurozone countries are showing negative yields.
All right, Daniel, I'm going to keep you with us because as someone, especially as someone who works in both Madrid and London. You're a great person to ask about Brexit. I also want to get your take on how this European Union is going to handle the recovery package that looks like Angela Merkel saved at the last minute. Daniel Lacalle, chief economist at Tressis, stays with us.